If you've been thinking about moving, but you haven't acted yet, I want to speak directly to that tension for a few moments. Most homeowners I talk with right now aren't confused. You probably already know why a change sounds appealing. Maybe you need more space. Maybe you're ready for less. Maybe it's the location, the layout, or just the feeling that your lifestyle has shifted and your house hasn't kept up. What you're really wrestling with is timing. And the assumption underneath the hesitation is usually this: waiting feels safer. It feels like you're reducing risk. But waiting isn't neutral. It's a position. It has consequences just like moving does. When someone tells me they're waiting, it usually connects to one of three things: rates, prices, or inventory. Let's start with rates. If mortgage rates fall meaningfully, monthly payments can improve. That part's straightforward. What often gets overlooked is what happens at the same time. Lower rates tend to increase buyer demand. When more buyers re-enter at once, competition increases. Negotiating leverage can shrink. Seller concessions can tighten. So the trade-off becomes this: potentially better payment versus potentially less negotiating flexibility. Neither is automatically better. It depends on what matters most to you. Now let's talk pricing. Headlines speak nationally, but real estate behaves locally. And frankly, it's even more hyper-local than that. It's all about the neighborhood and the price band. In Clark and College counties, a well-positioned home in a desirable area may move steadily regardless of broader headlines. Waiting for a broad price correction may not meaningfully change the outcome for the type of property you would actually buy or sell. Inventory works in a similar way. Yes, we have more options than we did at the extreme lows of the market. That's true. But when inventory rises, buyer activity often rises with it. More listings don't exist in isolation. They exist inside a demand environment. The deeper question underneath all of this is not really about rates, prices, or inventory. It's about whether your timing is aligned. If your employment situation feels unstable, if you need to build savings, if your family situation is shifting, then waiting may be the right move. That's strategic patience. But if you're already mentally committed to a change and you're waiting for headlines to feel cleaner, then it's worth recognizing that inaction has structure too. If rates fall, demand may rise. If prices continue drifting gradually upward, the home you want may simply cost more later. If you already own, you may be living in a home that no longer fits while delaying repairs, updates, or lifestyle adjustments you've already acknowledged internally. None of that is dramatic. It's incremental. But incremental changes add up. Now, if you do already own and you plan to sell when you move, there are generally three structural paths you can take. You can buy contingent on selling, which reduces financial overlap but ties both timelines together. You can buy first and then sell if liquidity allows, which separates the transactions and often strengthens negotiating posture. Or you can sell first and purchase afterward, which removes overlap entirely but requires comfort with temporary housing and transition. Those options aren't dictated by headlines. They're dictated by your equity position, your liquidity, and your tolerance for coordination and risk. So the real question isn't whether this is a perfect market. It's whether your personal timing aligns with a clear strategy. When your internal timing and your structural plan line up, hesitation usually fades on its own. If you want to go deeper into the numbers and the specifics, full details are in this week's Market Pulse Weekly blog. You'll find a link in the description below.